And you said on CNBC that you felt that the government kind of was doing too much to rescue some of these companies. And you were saying things like you didn't care if the hedge funds got wiped out. And I just wondered, so what would that look like if the government were to do what you recommended? And, what you were saying were things like, oh, they wouldn't get to summer in the Hamptons, and who would care if they got wiped out? But, I also wondered, like, that sort of applies to, well, you tell me, maybe it doesn't apply to people like you, but would you be willing to be wiped out?
Yeah, I mean, I've never really been defined by my money. I think I was an evolutionary person with the same values. I may have been a little more douchey when I was younger or harder to deal with, but I was still the same person. And I frankly felt that I had the same worth as a human being when I was growing up on welfare, or when I was in my 20s or 30s, or now in my 40s. I think that, money is a projection that other people use. And I used it on myself for a while, and now I use it less. And so, being in a position to actually realize that, the school teacher that makes $60,000 is just as important as I am is the truth. And so, yeah, you could take it all away. I don't really care. It'd be a fun ride no matter what. I think I have a great set of memories that I've created for myself. And the journey's been a blast, and I hope to have another 50 years of those things. What I was speaking about on CNBC was just my frustration about not wanting to acknowledge, where the Federal Reserve and Treasury were not acknowledging how the actual economy works. The United States is an economy where the overwhelming majority of the GDP is generated by consumers. And the way that, consumers lift up the American economy is by spending money. And when you take revenues away from the American consumer because they're unemployed or because they can't earn wages, then they're going to spend less, which means that the economy contracts and you have a recession. So first principles thinking would tell you that you put money in the hands of consumers, and you put enough money in their hands such that the amount that they have exceeds what they need to live. And then the excess spending they will spend. And the reason why that's important is then it forces companies to then reopen faster, hire people more. Invariably, what you'll see is then they'll also have to pay them more because, again, these consumers have more money. But that's actually all a good rebalancing of what's been happening for the last 40 years, which is that the pendulum has swung. In economic theory, you say that the pendulum swings between labor and capital. And in the last 40 years of trickle-down economics, what we've really done is swung the pendulum so far towards capital that people who are the labor class don't really have the earning power that they actually had before. And putting a lot more money into their hands, where effectively you have to pay them more to come back to work, isn't a bad thing. It will recalibrate what is a very lopsided distribution of leverage. And so getting power into the hands of labor and getting more money into the hands of labor actually sort of subverts and sort of puts an end to trickle-down economic theory. And it kind of worked in the 80s, but frankly in the 90s and 2000s and now it's a dated economic philosophy that doesn't map to how the world works.
And you've said that there's room for everyone to have an uncorrelated hedge in their portfolio, and you say that Bitcoin can serve as that. You also have called it schmuck insurance. And I wondered, do you think that the coronavirus pandemic is sort of like Bitcoin's moment?
Not really. I think that when I talked about it being schmuck insurance, the place that I'm coming from is that we want something that frankly will protect our wealth, however much that it is that we have, in cases where the people in power really get over their ski tips and do something that we can all see is a bad idea, but they're driven by short-term political incentives. The reality is that, governments used to be run by a very different kind of person. And in some countries today, I would say that, it harkens back to how it used to be. So, for example, if you look at Singapore, the smartest people that graduate and, some of the most capable individuals go into the bureaucracy and work for the Singaporean government. I don't think that we could all look ourselves in the eye and honestly say that that's necessarily true in Western democracies. It's a kind of person that really excels in public relations or, winning elections. It's not necessarily people who excel at governance or legislation. And so the reality is that, we have people that are somewhat mismatched for the job. And invariably, whenever that happens, irrespective of whatever profession that is, mistakes happen. Just to use a stark example, it's kind of morbid, but if you put a pilot who's not a great pilot, who actually really wanted to be a school teacher, in the cockpit of a plane, that person is much more likely to make a mistake that has huge consequences than a person who lives and breathes wanting to be a pilot. And that's also true of legislators. And so the reality is that, we have folks that will focus on short-term window dressing type solutions. Again, you can see it today in what the Fed and the Treasury are doing. We've massively increased the deficit and the debt. The United States government is now responsible for more than 50% of the GDP, which essentially makes us a quasi-communist country, socialist country at a minimum, except without any of the benefits. So you still have sky-high healthcare and exorbitantly high useless education. So it's kind of like the worst form of socialism. Dummy socialism. And so, when those kinds of things are happening and they're not getting fixed and they're only getting exacerbated, I just think that if people have been hardworking with their head down, they should have an opportunity to make sure that they don't get wiped out if the government itself just continues to make a string of bad decisions that then have rising consequences. And Bitcoin, to me, is the only thing that I've seen so far that is really fundamentally uncorrelated to that decision-making process and to that decision-making body. Because at the end of the day, any other asset class, equities, debt, real estate, commodities, they're all tightly coupled to a legislative framework and an interconnectedness in the financial markets that brings together many of the governments that are sort of behaving this way. And so it's almost like a bet against the ruling class in some ways, and making sure that you have a small amount of insurance, because insurance is not something that pays off 50 cents to the dollar. Insurance is something that pays off, $1,000 to $1. You want these massive asymmetric payoffs because you want to be sure that a small amount of insurance can basically make you whole. And that's why I just think that, you should take 1% of your portfolio, put it in Bitcoin. Never look at it. Don't look at the price. Don't look at anything, and hope that 1% goes to zero. Then you have 99%. But in the case where that 99% goes to zero, that 1% will probably be worth 120%, and you'll feel like a genius.
But I guess what I'm confused about is, if you feel that the government isn't handling the coronavirus response, in terms of, handling the stimulus and dealing with the economic fallout in the best way, then why is it that you feel that this wouldn't be the moment when that uncorrelated asset would be something that people could turn to?
Look, the government has done, depending on how technical you want to get, 6 or 7 forms of quantitative easing since the great financial crisis. So we could have picked any one of those moments and said, this is Bitcoin's moment. And what I'm trying to get across to you is that, there is no seminal event. And I think that people waiting for a seminal event probably create more speculation than is healthy for Bitcoin. I think that, this is a parade of terribles. It's a bunch of small things that eventually add together, bring down the entire, way in which we think the financial infrastructure of the world works. We will lose credibility in it. There will not be a single thing, Laura, that you will be able to point to. This will be the sum of many, many bad decisions. And it's the compounding of bad decisions. And, historians will try to pinpoint an event, and I think it'll be not worth the time. I just think that this is it's a pattern. And, when you see the pattern, I think you just have to be prepared to hedge it, be on the other side of it, hope the pattern stops, because quite honestly, if your Bitcoin bet pays off, it will be cataclysmically destructive for the world. And that'll have enormous consequences to many people that we all know and care about who weren't hedged in Bitcoin.